If you're 62 or older and you own your home, I want to spend the next few minutes with you because there's a financial tool most people either don't know about it or they think they understand, but they don't. It's called a reverse mortgage. And today, I'm going to walk you through the 5 things I wish every homeowner knew before sitting down with a specialist like me. I'm Jeff Buum. I'm a certified reverse mortgage specialist at Fairway, Heartland in Sioux Falls. And this is not a sales pitch. This is just the information that you deserve to have. So number 1, and I want to start here because it's the number 1 fear I hear when I explain a reverse mortgage. The bank will own my house. Now, people believe that if you take out a reverse mortgage, the bank ends up owning your home. And that's simply not true. When you take out a reverse mortgage, your name stays on the deed, you own your home, period. The lender places a lien on the property, same as any other mortgage, but you remain the owner. You can sell it, you can leave it to your kids, you can move, all of that's your decision, it's not the bank's. The loan only comes due when you permanently leave the home, whether you sell, you move out, or you pass away. As long as the home is your primary residence, you're paying your taxes and insurance and maintaining the property, you're good. There's no expiration date on this. Now, number 2, what about your kids or your heirs to the home? Midwest families are tight, I get it. Nobody wants to leave their children or their heirs with debts that they can't handle. Here's what actually happens. A reverse mortgage is what's called a non-recourse loan. That means when the loan eventually comes due, your heirs are never required to pay back more than what the home is worth at that time. So if the loan balance has grown beyond the home's value, FHA insurance, not your family, covers the difference. Your heirs, they have 3 options. They can sell the home and keep any of the equity remaining. They can purchase the home themselves at 95% of the appraised value or simply walk away with no personal liability. Your family shouldn't be anxious about future recourse over a reverse mortgage because there isn't any. Number 3, this is the part that genuinely surprises people. A reverse mortgage eliminates your monthly principal and interest payment. For retired homeowners on a fixed income, that one can change completely or reshape your retirement budget. But here's the important part. You still have 3 responsibilities. You must pay your property taxes, keep your homeowner's insurance current, and then also maintain the property in reasonable condition. Now, these are not optional. If you fall behind on your taxes or your insurance, the loan can be called due. A good reverse mortgage specialist, someone like me, will make sure you completely understand exactly what you're agreeing to before you sign anything. Number 4, most people assume a reverse mortgage means getting one big lump sum of cash. Now, that's actually just one of your options. So your proceeds can come as one lump sum of cash, or a monthly payment to supplement your income, or a line of credit that actually grows over time at the loan's interest rate, or any combination of those. That growing line of credit in particular is something that financial planners are increasingly recommending for clients who just don't need the lump sum of cash right now, but they do want a safety net that gets bigger over time. Which structure makes sense for you depends entirely on your retirement situation, and that's exactly why I have a conversation with every client and their financial advisor before we ever touch an application. And finally, number 5, and this one also surprises people. Before you can close on a reverse mortgage, federal law requires you to complete a counseling session with a HUD-approved agency. This is not a formality, it's a genuine, independent education session, completely separate from me and designed to make sure you fully understand how the loan works, what your obligations are, what your alternatives are. It typically takes about an hour. It can be done by phone, and I will connect you with an approved counselor at no cost. I actually see this as a feature of the program and not a hurdle. A client who goes in with full understanding is a client who's going to be happy with their decision for years to come. A reverse mortgage isn't the right tool for everyone, but for the right homeowner, it can genuinely be life-changing. If you're wondering whether it fits your situation, the best way to find out is a simple conversation, no pressure, no commitment, no sales pitch. And if you found this video helpful, hit subscribe. I put out content like this for all types of homeowners who want straight answers. Thank you for watching.